Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date is January 4th, 2017. I'm going to take a quick look at the euro versus US dollar from a technical perspective. Today, we're seeing the euro versus US dollar move to the upside. I said I would do technicals, but we did have better data coming out of Europe as far as the PMI data, as far as the CPI flash estimate, and that helped to keep the market up near the high price. The market had actually moved higher already into that data, and we didn't move any higher. But at least we're maintaining the bias to the upside in trading here today. The problem above is comes in here against the moving averages. We have the 200-hour moving average, that's a green line, the 100-hour moving average, which is a blue line, and also the 38.2% retracement of the move down from this high to this low. This is Friday's spike high, and this was yesterday's low, which, by the way, was a new 14-year low. You can see that was rejected pretty quickly. Market moved a bit higher, and so what we have up here near the the peaks at the 104.59 level is some resistance with the moving averages and 38.2% retracement. There's another level that I want you to be aware of as well, which if we're going to go higher, we need to get above these levels, and that level comes in at the 104.62 level. What's the importance of that level? Well, if I go to the daily chart here in the euro and I scroll back in time, and I go to this low right here, this low on March 13th came in at 104.61.5. Let's call it 104.62. Let's go back to our hourly chart and look at the 104.59 here, which is a 38.2% retracement. 104.62 is only 3 pips away from that level as well. So we need to get and stay above the 200-hour moving average, 100-hour moving average, 38.2% retracement. And we know in our mind that 104.62 level as well. I can put a horizontal line across near that level here to remind myself that that level is going to be a level of importance close enough. And so we need to get above this area in order to push higher to give the buyers more confidence from a technical perspective that the bias is turning from more bearish below these moving averages, below the 38.2, below the 104.62, to more bullish above those levels. And that's what traders try to do, is look for those changes in bias from negative to positive, from the clues, from the technical tools. Now, what is keeping this pair more supportive here? And if I drill down to the 5-minute chart and take a look at the price action here, you can see the up and down activity that we had over the last couple hours of trading. We can also see that draw a trend line here connecting our lows on the 5-minute chart, and we have this 100-bar moving average. The last thing the market did down here before moving higher was what? Test that 100 and 200-bar moving average. That's a green line of the chart. That's lagging behind over here, but it tested those two moving averages and moved higher. That was a technical clue from traders that the price had the potential to move higher, and indeed we did. But you can see that we're having some trouble up near the highs, near our resistance levels. And so if we are going to move higher, we need to hold support against this area, right? And if we can hold support against this area, then the bulls still remain in control on an intraday basis. We still remain in control in this trading that we see in here today, and we have the potential to move higher. If we go below that level, the waters gets a little bit more muddy, and things don't look so bullish. So that's a look at the euro versus US dollar. My name is Greg Michalowski for ForexLive.com. Good fortune with your trading. Bye-bye now.